Hello, everybody. This is Nick Burton with the Small Business Development Center, and I am, per request of many of you, providing the long-awaited spreadsheet that is going to be used for the financial projections section of uh, the major infrastructure grant. And this tool that we're going to be reviewing today is so much more than that. We'll jump into it, but just as a quick reminder, I'm Nick Burton. I'm an advisor with the Northern California Small Business Development Center. You can see their webpage here. That's why we're starting on this page. And if you are not a member of the Small Business Development Center, we highly recommend that you sign up for services. I will leave a link in the description of the YouTube video as to where you can do that, but you can also email me directly. This should be going out to all of you who already have established contact with us, frankly. So what we're going to be discussing today is a spreadsheet developed in Microsoft Excel. For those of you who are not familiar with Excel, don't fret. It can be complicated, but we're going to go through things step by step here. And if you don't have access to Microsoft Excel, because that's a paid service, this exact same template was developed, and I've tested it moving it into Google Sheets. So if you have questions about Google Sheets, again, this is going to be posted on YouTube. You can post a comment in the section below, and I'll try and answer your question as promptly as possible. First and foremost, I want to thank all of you who have patiently waited for this. The history of this spreadsheet, I've been working with several daycare clients over the years, frankly, but within the past year, and I've developed custom financial models for them to get loans. So this is actually a 3-year financial projections where you're only really required to come up with 1 year. And this template can be used really as a great business forecasting template for center-based daycares. It can also be used to get an SBA loan. In fact, it was really developed as projections to support a business plan. But outside of that, I don't want to get too deep into the weeds. Extreme key point here. If you are a family daycare home, I'm developing a completely separate spreadsheet, and I'll try and have that out as soon as possible for your business model. This is really for center-based models. So the history of this spreadsheet. Let's get into this. This spreadsheet was developed specifically for center-based daycare providers that were applying for loans, and I tried to develop it based off of a room model where you have so many rooms where you're paying rent and where you possibly could have a loan associated with your project. So we're going to go over some basics of the spreadsheet. We're again using Microsoft Excel. This might be, you might be able to use Google Sheets as well and follow along with me. In order to do that, you'll have to probably Google how to do it. But if you have access to a Gmail account, or even better, a Google Apps or Google Workspace account, the Google Workspace has Google Sheets, which is a spreadsheet program just like Microsoft Excel. So again, this is developed to work in Google Sheets. All right, that being the case, a couple rules for this spreadsheet. Rule number 1, with any spreadsheet that you have, save a backup copy. So save this as a template, as a backup copy, as an unedited version, and then anytime you're making edits, you're going to save a copy. So in fact, the very first thing I'm going to do up here is go File, Save As, 3-year projections, Google Sheets, base for webinar, live. That's what I'm going to name it. Again, I went up to here, File, and went to Save As, and that's how I did it. So very simple. Now we've got a backup, and I recommend routine backups as you go because it's very easy to blow up a spreadsheet by hitting one wrong button. So that's rule number 1, save a backup and then constantly save versions of a spreadsheet in case you make a mistake. Rule number 2, everything that I have in gray here is an area where you can input data. Everything in white, so here's gray areas here, as you can see, that's where you're going to input data. Everything that is white has either formulas in it or is an area where you should not put something in. So Just letting you know. um, so if you happen to make a mistake and, oh no, I entered letters in here, you can always go back and hit the undo button here in the top left corner. So I'm going to hit that undo button right in here, and it's fixed the error. So the spreadsheet is formed of several tabs at the bottom, and an entire spreadsheet is known as a workbook. And within each, the workbook as a whole, there are sheets, and you'll see these tabs at the bottom. I'm going to tab through these tabs here. I have 3 years of projections, and I've blown up year 1 because we're going to look at it. I have year 2, which automatically populates off of our data here. And then I have year 3 as well. The next page is loan calculations. This is something that we're going to use, and you can use outside of the grant if you're just wanting to determine whether maybe moving to a center location or making an adjustment to your business and getting a loan would be a good business decision. Well, this is a super handy tool to have. The most important page we're going to have here is our inputs page, which takes a look at each individual classroom. And then I have some calculators that I built within the input page. And then we have the rent page as well. So if we're going to be looking at the rent that you're going to be paying if you're renting a location, or frankly, if you own a building already, then you can just ignore this or set the numbers to 0. Uses of loans. This is just a quick little template for your loan. It's not as applicable to the grant, but we will go over that section briefly. And then I have this one called Year 1 Employee Edits. And this provides a little more custom function for those manual entry for employee costs. And we'll get into why you might want to do that. I tried to build this template to be as plug and play as possible. Now, I want to make one huge disclaimer here. I have run some trial scenarios on this, and they seem to pan out just fine. But ultimately, if you find an error in the spreadsheet, don't hesitate to reach out to me directly. If there's some sort of formula error, I've had to rush to get this out. I haven't had time to go through with a fine-tooth comb. And when I do that, I sometimes will spend days or a day or two ironing things out. And over the last 24 hours to 48 hours, I've been just adding more things to this spreadsheet to try and add better features to it. So without further ado, I'd like to get into a live edit, and we're just going to build a sample business right now in front of us on paper. So the first thing we're going to do is we're going to go into our inputs. And the assumptions we're going to make are that we're going to have a 4-classroom daycare center. Now, I have built on this page, the inputs page, templates for up to 8 different classrooms. So each classroom will have its individual data input in these sections here, which I'm kind of tabbing through. The gray areas, again, are areas where you're going to enter in data that's specific to your business model. How many, it's where you enter in data. Everything in white, you're not going to enter data in there. So in fact, here's a gray area here. Make sure that's the same color gray. Areas like this in white, you're not going to enter data in. So the main sections are our kids per classroom area. So I've created a model here, and I've broke it into really 3 categories of kids with 2 subcategories. I have kids age 0 to 2. Well, actually, 2 categories of kids. We have subsidized rates, and we have private pay. All of you should be familiar with what each of those are. In addition to that, I've got 3 different age categories: 0 to 2, 3 to 5. So it should be really 0 to 3, 3 to 5. So that's through 2 years of age. And then school-age children. So, and those each, again, are broken into private pay and subsidized categories. So I don't know what your rates are, depending on your county, city, location, CDSS, et cetera, what you want to charge for private pay, competition. I created a little calculator here where, for example, in the 0 to 2 age, this is the weekly rate that you're going to see up here. So again, the weekly rate, let's just zoom in on this here. So if I want to enter in, $500 for a subsidized 0 to 2 weekly rate, it then provides a yearly rate. So that takes that amount weekly multiplies it by 52, because there's 52 weeks in a year, to arrive at the average monthly rate. That average monthly rate auto-calculates here. So let's just say I do $600 as private pay. You'll see it adjusted what the yearly is and the average. Now, those are ridiculously high. Everyone could retire early if that were the case. So these numbers are realistic. Actually, they came from a center-based client that owns multiple centers. They provided me these statistics to use as examples. So, and again, numbers may vary. Now, I did not tie this to the actual rates we're going to place in here for each room, because I wanted to give you the ability to manually enter these in. Maybe rates might be different. Maybe one room might be different than another. So I just used this as a calculator where you could get a general quick idea of what your subsidized and private pay is for these 3 age categories. Then you would manually enter them in here for each room. So you'll notice private pay, kids 0 to 2, really should be 0 to 3, $1,842 monthly is the average. Again, this is all monthly income. Private page 3 to 5, $1,408 average. This is based off my calculations over here. And this is the number of kids in each category you have. So I probably should have labeled that, but everyone noticed that. Again, note that this column here is the number of kids in each category. So we're going to do 2. We're going to enter the number 3 here. So 3, I'll actually go 0 and 0 this out. So you'll notice this is the total amount of kids right here. It currently says 0. So we're going to go 3 private pay, and then we're going to go 8 subsidized. So we have 11 total kids in this classroom. Now we're going to go down to classroom number 2. Classroom number 2, I've labeled as 6 private pay from age 3 to 5 and 16 subsidized for a total of 22 kids in this class. I'm going to go down to classroom number 4. I have 24. So we're kind of maxing out this classroom here before we have to add another aide or teacher to the class. And we'll get into how the employees work here shortly. But we've got a lot of kids in here. It's 24. And then I've got in class number 4, I have 23 school-age private pay kids. I just went ahead and added them in there as well. Now, as a reminder, this grant is only applicable when you're applying. You're not expanding to fit school-age kids, but that doesn't mean that your center location might not still service school-age kids. So I wanted there to be a feature to look at financial projections where you have a mix of all age ranges. And this is just, again, for an example. Classrooms 5, 6, 7, and 8 are all empty here, so there's no statistics associated with them. Now, again, you understand the income calculator up here, what this is used for. You understand how to get your inputs for classrooms here. Now we're going to scroll down to our employee costs. So I have 2 categories of teachers. I have a lead teacher and an aide teacher. And you can input any number you want in here, but I have both of them working full-time generally as a category in here. And I have some ability to adjust whether they're full or part-time, but ultimately we show these folks as working full-time. And just so you know, the number used in general business for a full-time employee is 2,080 hours per year, 2080. How do we arrive at that? 8 hours per day, 5 days per week. This is the time calculator down here, so you can get an idea of what to enter. 5 days per week, 52 weeks per year is 2080. Now, in employment law, obviously, there's some vacation time that is paid, sick time, etc. But I use this just to help you understand your inputs in here and to help you understand what numbers you want to put in here. So, for example, let's say that I want to pay my aide teacher. My aide teachers are only going to work part-time. Maybe they're going to work 6 hours a day, and they're going to work 5 days a week. That's yearly hours work would be 1,560. So you would come in here to aide teacher and put the number 1,560 at $17 an hour. Here's the annual cost for that teacher. That's if you only maybe have part-time staff or you're only open part-time. So you can use this to calculate what you end up entering in here. Let's say your lead teacher costs you $45 an hour. Then they're a $93,600 salary per year. Let's say we're just going to set them at $25 an hour per now. It shows what their annual cost is. This translates into the costs of employees. Now, I built this spreadsheet to be pretty automated. So for those of you who are super handy with spreadsheets, you can edit this to your heart's content. That's fine. But I'm just trying to help people enter things in gray areas here and have it come up with an approximation of what their business would look like on paper. So again, this time calculator is used to fill in this data here. And you can use it as just a handy tool to figure out what you can afford to pay somebody, or the consequences of adding $1 or $2 or $3 per hour raise. So now we're going to go to, we're going to see how this impacts our actual annual inputs. So what we have in here, the amount of hours per year and the cost per hour, is what is going to reflect in the actual expenses for that employee. So I'm going to come over here to, well, actually, let's come back to this, to inputs. In class number 1, the way I built things, anytime you have 12 kids or less, you have one employee, a lead teacher. Anytime you have more than 12, you automatically are assigned an aid teacher to that classroom for your expenses. And as we all know, again, I think I've got those numbers right. I think it could be 0 to 11, but I believe it's 0 to 12. So, or 1 to 12 kids, you have one teacher. Now, realistically, sometimes you'll have 7 kids in a class that's still one teacher, or you might have 13, 14, 15 kids. You might even have 11 kids if they're infants and have a primary teacher and an aide, just depending on the needs of that classroom. I've created a custom template where you can add in those expenses to your heart's content, or you can customize it. But for now, again, this is just really to teach you all how to, or it's really to get you numbers as automated and as easily as possible. So I'll just show you an example here. Let's look at class number 1, 11 kids. So we're going to come here to year number 1. We're going to go down to, actually, we'll look at this sheet as well, so you can get familiar with it, and then we'll look at the cost of our employees. This is our projections for year 1. We have the following inputs. Class revenue, which is directly related to how many kids are in that class. So notice this number is 17,310. We're going to go back to our inputs, 17,310. What if we take this number of subsidized kids down to 5? Our revenue for that class is now $12,891 monthly. We come back to year 1, $12,891 monthly. It's changed it. Now let's go back to inputs again, and we're going to go back to 8 here. 8 subsidized kids. We're back to that 17,310. So you make an adjustment here, it affects your revenue on the summary page. And in fact, it affects that for year 2, and it affects it for year 3 as well, which is great. So now we're going to look at, so we'll look at the next input you have, which is class 1 % occupied. So it's easy just to put it's 100% occupied all the time. But I ran into situations with my clients where some kids were only there, they weren't there, full time during the day. They might only be there 3/4 time. So based on your classroom statistics and how occupied it is, you can use this number here to adjust your actual real revenue per classroom. So maybe you're only earning $15,000 per classroom, or for this classroom, even though theoretically it could earn 17,310, maybe two of the kids are only there part-time. This is where you adjust that number, is the percent occupied. And notice here under this tab right here, class 1 total income, that is a multiplication of the 17,310 times 90%, or 90% of that number gives you your total income for that classroom. So all of these, class 1 through 8, if you have data entered in on the inputs here in any of these classrooms, if you show that you have any kids, that class is going to start generating revenue, and it's going to show here. And then based on the percent occupancy you've shown, it will show you how much revenue that class generates. Here's where this becomes handy. Take a look at class number 4. We have school-aged kids. Well, it's pretty easy to understand that school-aged kids are only going to be there part of the time because they may be in school. So what I noted here underneath year 1 is this is the max revenue we could earn for school-age kids. It's just $32,384, but I'm going to say, well, we're only making 50% of that because they're there part-time. So then if you look down here at class 4 total income, well, there's the potential to earn $32,000 if those kids are there full-time on a monthly basis. You're only earning $16,000 because they're there 50% of the time. So the easiest thing to do would just be to set everything at 100% and adjust how many kids you've got. You can just lower the number on the inputs. That may be easier. If you really want to get custom with what happens if I have a little more full-time kids, or if I just want to make some micro adjustments on a monthly basis, this is how you do it with this percentage number. That's going to total, again, all of your income here. What I also allowed for were several other areas for revenue, which can be manually entered in. I don't know every source of revenue, but I know there are reimbursements for food programs. So you can feel free to add food revenue by manually entering in. Let's say it's $1,000 a month. So we put $1,000 in this month, and then I'm just going to copy that over to all of these months. Now you show food revenue income. So let's go ahead and do that. Let's just show $1,000 a month on average for food reimbursements. I have other categories of income. You can feel free to type something in here if you wish. You can call it new income source, whatever this ends up being. Again, it depends on your business model. Some programs offer music programs and they charge extra. Some might offer other unique classes that they charge extra for. So you have 6 different line items, income line item 10 through 15, where you can add other sources of income. Now we have costs of goods sold. So for purposes of this discussion, I really don't want you worrying about costs of goods sold for your classrooms. Think of costs of goods sold as like selling hamburgers for a minute. If you sell a hamburger for $7 and the patty costs $1, the bun costs another $1, that's $2, and your lettuce and your condiments cost 50 cents, that's $2.50. Your costs of goods sold would be $2.50. But that doesn't include the costs of your employees to make the hamburger. So you typically find like raw materials in this cost of goods sold section. And you find other operating expenses in the section we have called operating expenses, which we'll get into here shortly. So I'm going to recommend that you all leave this section blank, with the exception of if you've got a food program, for example. Let's just say that we get reimbursed $1,000 for our food program, but that's costing us $500. So we could enter in $500 per month. We could do that, and I'm going to do a shortcut, which is drag on the corner and paste these over. So now we show, okay, we've got a food program. So what's interesting is you could say, okay, I'm getting $1,000 reimbursements for food revenue and it's costing me $500, so I'm making $500 profit on that. So this helps us arrive at what we call our gross profit, which is our total revenue minus our costs of goods sold. And since we're not making hamburgers, it's going to be about the same because there's really not much cost of goods sold. Now we run into our major expenses, which are operating expenses. So this is where I provide you a tremendous amount of customization where you can add a ton of expenses that you want in here as you see fit relative to your own business. But first, we're going to talk about payroll expenses. We have the owner's salary of the owner. I'm assuming it's owner or director. And then we have a category for two owners. In fact, some of you that I'm working with right now are partnering with somebody or will partner. So this can be manually entered in. Now I have noticed I now have employee costs broken into two other categories here. One of them are class heads and then the class aide. So notice class 1, 2, 3, 4, because we have a 4 classroom center here. And all of those classrooms have at least one kid in there. So we have to have a teacher in there. And so that's the cost of our teacher. $4,333 per teacher based on the salary inputs that we put in for a class head. That is probably a little high. Let's go to inputs and we're going to go down to salary and just watch this. We're going to go lead teacher, $22 an hour, $45,760 a year. Now look at this. Wow. All of a sudden our numbers changed. That's how easy it is. And you can see that now our total annual salary, by the way, in green, these subtotals, that's the total of everything for these months, all 12 months combined. So everything in this would show up here in the total. I didn't do that for this area right here because it would clog up and look messy. This is the data you really want, which is your total income. As we come to our expenses down here, you'll see we total up just fine. Okay. So then you'll see the next category are the aides necessary. Now you remember classroom number 1, we only had, I think 10 kids or 9 kids. So we don't have an extra aide in this classroom. Watch what happens when I go over to inputs and in class 1, let's say we have a total of 15 kids now. Well, check this out. We now have an aide cost for class 1 that automatically populated in. So by entering in the number of kids in the input sheet, it's going to automatically populate what your salaries are. Okay. So we're going to go back and we're going to put this back to 8. Now, this brings up a problem though, because classroom number 4 has part-time kids, essentially school-age kids, and you might only need people part-time. The problem we run into is, look at this. We have $32,000 of potential income up here, but it's only 50% occupied. But we're paying for classroom number 4, a head teacher, a full annual salary, and an aide teacher a full annual salary. Well, that's where I came in here for you to have, again, this is not a perfect model, but I'm trying to give you some tools to kind of cheat your way through this. So let's just say that, well, we're going to put that person's only there 50% of the time. So it's kind of like they're there part-time. And then we're going to go down to classroom 4 underneath this column right here, these percentages. We're going to put underneath class 4 that they're 50% of the time. That allows us to have more accurate costs of employees based on the actual amount of time kids are in those classrooms. Now, the assumption is that for infants and for, kids younger than school age, that you're pretty much going to be looking at people there being full-time. And if they're not, again, remember, we can kind of adjust that on a monthly basis up here with the percent occupied. Okay. So what you need to know is that, take the summary, is that our employee costs are here. Now, work comp is automatically calculated in based on your total monthly employee costs, and I use 2% as a work comp fee. I think I would say between 1.5 and 3% would be industry average for daycare, but you could probably all teach me something on that. And then I have payroll taxes calculated in as well, which is a cost that you're going to have to bear. And that's payroll taxes on your owner's salary and all of your employees. You can put your salary as a director here or your director's salary in here. What may happen is, as a director, you still might be in one of the classrooms. So you might kind of highlight yourself and say, okay, I'm just going to bold this out here. I'm going to color this cell. You might say, I'm going to be a director on site, and that means I can also be a teacher. I'm going to be the class 1 head, and I'm just going to color us red there. You'll notice I'm making $45,760 a year, but I want to make a little bit more money myself. So let's say you're making that $45,000 a year, but let's add another $2,000 per month. And again, you'll see how I'm cheating the system here. So if you actually are the class 1 head, because you're going to be on site, you're going to be in a classroom, you're going to be monitoring, managing everything, but it prevents you from having to go hire somebody and pay an extra $45,000 a year, but you want to make a little bit more money, you can add your own salary in here. Or let's say maybe you just want to take a salary, and maybe this is your second or third center. Maybe you're not going to be on site, but you still need to make money. You can put yourself a salary in here. Let's say it's $5,000 a month. You can program that in there. So what I like to do when I'm doing business planning is I put owner's salary to 0, almost always. And I want to see what this business looks like prior to paying oneself. Now we come into other operating costs. You're going to have to figure this out. Now, by the way, I left areas in here for 2 employees, extra employees. One of those might be a cook or maintenance person, or janitorial, etc. And you would have to manually enter in how much you pay them a month down here. So let's say we have another employee that we're paying $1,500 a month. They come in and they do part-time administrative services. So now I have added $1,500 a month for this extra employee. This is where you can do that. Now, work comp is automatically calculated based on the percentage. Watch, if I do work comp 3% of salary, your numbers go up. 2% of salary, all the numbers change for work comp. Office supplies, advertising expense I put in here, licenses and taxes, utilities, rent, insurance, and actually rent is, we're going to change this right now. That should be not manually entered, that's automatically entered. Insurance, software, accounting, bookkeeping, tax filings. I would expect you to come in and enter as much of your own expenses as you want to enter in, and take the time to accurately look at your current business. If you're a home-based business and you're jumping to a center, what are your current expenses? What do you think you're going to have? If you're already a center-based operator, take the time to really look at your profit and loss statements and put in some accurate numbers here. It can only help you. So notice this. We've got our total expenses are $29,000. It's the sum of everything in this operating expense column. And that results in a net income, which is our gross profit, the sum of all of this income, our 4 classrooms, minus our total expenses. Now, I know I'm missing a lot of expenses. This business is overwhelmingly profitable. I don't think every center necessarily is going to make this much money, but you get the idea of how this template works. So let's come back in here and let's say that the owner's salary is going to be $6,500 a month. So now we're going to go ahead and plug that in. The owner's now taking a salary. Our payroll taxes have gone up. And you look at, here's your net income right here, $461,106. Now, again, for purposes of this analysis, I'm just entering in rough numbers here. It's going to be on you to really dial into what you think your actual numbers are going to be. And after talking with several daycare center providers through this process, I would be conservative in your estimates. In fact, with some of your percentage occupied here or the inputs with the actual number of kids you think you're going to have, I would be a little bit more conservative with that. These numbers assume, these inputs assume your maximum subsidized and private pay amount if a kid's there essentially full time. It's what you're going to get per week. You'll know better than I will as to how much leeway there is, whether they're there for 3 hours, 5 hours, 7 hours, and what that results in. But you are given tools to be able to tweak what those numbers are going to look like here by adjusting the amount of kids and the percentage of occupancy you've got. All right, so that's how this sheet is put together. Year 2, you have to manually enter all this in, and year 3, you have to manually enter in all of the same information that you manually entered in here as well, in all the gray areas. But that can give you up to 3 years of projections, which is what most banks want to see. So how I've run some of this is I've said, well, let's assume that maybe as we start up, we're not going to be completely occupied. So as we open a new center, maybe we're going to be, 60% occupied, 60, 60, 70, 70, 80. Let's just run the numbers, 80, 80. Let's just say we're always 80%. And that's just the amount of time the kids actually end up spending there. Let's do the same here. We're going to go 60%. Again, a new startup business. This is the first year. We would expect in years 2, 3, and 4, and 5 that we're going to have more occupancy because we're an established center. I'm just going to enter in some random numbers, 80% occupied. And you'll see how this translates into we'll go 70%, and then we'll jump up to 90%. Translates into more realistic numbers. And then, of course, with our after-school program, maybe we'll start with 25% occupied, and then we'll jump to 35%, and now 50%. So maybe this is a little bit more realistic numbers in our with our net profit, $300,000. I still think that's pretty good. Now we're going to jump to, and again, as a reminder, take your time to put every expense that you think is realistic. Utilities, internet, there's a lot of things I'm sure that I'm missing in here. That's why I left a lot of blank areas for you to fill in what those expenses are. Now we're going to go to what I consider the more interesting or fun stuff here. Yes, I actually consider this interesting and fun, I know. It will put you to sleep if you don't love spreadsheets. We're going to go to rent. This section here I built off of a commercial real estate leasing model. So you're going to input your square footage. You're going to input your rent escalation per year and your triple net escalation. We're going to go over what all of that is. So the gray areas, you enter things in, and in the white areas, you don't. So this I need to make gray. So the square footage is clearly how many square feet is in your building. And this total children figure down here underneath extra data, this figure for total children comes from the total amount of kids that appear on your input sheet. And then you'll notice it says square foot per kid, shows 51.2 square feet per kid. Realistically, when you're looking for a place to rent, it needs to be 45 square foot or more per kid. Otherwise, you just aren't going to have enough common areas. Remember, this is your total square footage that you're renting. So it's not all just classroom space. You're going to have some kitchen space. You're going to have hallways. You might have dedicated restrooms for staff. If you have school-age kids, there's going to be dedicated restrooms for school-age kids. So a safe number is 50 to 60 square feet per kid to be comfortable. So let's just say that we're going to rent 4,500 square feet. I'm going to enter it in up here. And our lease says that our rent increases 3% per year. So this is where you can enter that in. Base rent escalation 3% per year. You have something else called triple net expenses, which is probably going to show up in 90% of the leases that a child care center facility has. Triple nets are reimbursements that the landlord collects from you for expenses of owning the shopping center. And the three items are percentage of property taxes. So let's say that the shopping center is 10,000 square feet and you are in 1,000 square feet. You occupy 10% of the shopping center. So when the landlord gets his property tax bill, he's going to send you a bill for 10% of the property taxes. He's also going to send you a bill for 10% of the common area maintenance. That could be landscaping outside, roof maintenance, parking lot lights, janitorial services, etc. That's typically called CAM, or common area maintenance. And the third item is insurance. He has property insurance, usually general liability and loss insurance in case there's a fire or water damage, and you're going to pay your proportionate share of that. So in the real estate world, they look at what is your base rent per square foot. So here I have $2.25. Let's bump that up to $2.75 per square foot. And then triple net expenses is usually looked at on a square footage basis. Let's put that to 65 cents a square foot. And these are your escalation factors. Now we're going to come down here, and depending on how your lease or your rent is negotiated, sometimes there's free rent involved. So I structured this as if there's 3 months of free rent here. Watch what happens if I input a number 0 in here, it's free rent. If it's 1, you have to pay rent. So our base rent, are we getting it free? Let's say yes for another month. Look at, that's my rent costs. And this is, am I getting my triple net expenses free? Yes, I am. Or no, I have to pay rent. I just enter number 1 here. The reason why I split triple net and base rent costs from each other is because it's common for landlords to say, I'll give you 6 months free rent or 3 months free rent, but you have to at least pay your triple net or your common area share expenses. So I separated those out for us here. Okay, so notice my rent for the first year, as soon as I have 3 months of free rent, and then down here I pay $15,300 a month until I get to month 13, the next year. That 3% escalation kicks in. So now I'm paying $2.83. I was paying $2.75, and my triple nets have gone up to 67 cents. And then we go to the next year. We have an escalation here in the 25th month. You can see, and I took this all the way out to 36 months for 3 years of analysis. So this rent number, $15,300, should appear as your rent payment here. Here's your free rent, and here's your $15,300. So let's just, again, for purposes of this discussion, say that we have only 1 month free rent, and that we have to pay our triple net expenses. So still better than nothing. So now notice we come back to rent, and we just have those triple net expenses the first month, and now our expensive rent kicks in. Oh, and notice this. I found an error. $12,375 in month number 3. Let's go see what's going on in month number 3. I'm not paying triple net. I'm going to fix that. You can kind of use a spreadsheet to guess and check your inputs, just like you saw there. All right, so here's where, like I said, things become interesting. Now, this allows you to really look at many different real estate spots. And once you think you've got an accurate idea of what your income expenses would be for a spot, you can really start toying around with rent to see whether you can afford to be there or not. Now, let's say that there's no grants at all. And in order for me to get into this shopping center, I need to get a $500,000 loan. I'm going to come to my loan calculation tab, and we're going to enter a $500,000 loan. Let's say the interest rate is 7.5%, and the term is for 10 years. This would be my monthly payment. So you can enter in loan amounts here. And I really like this for home-based businesses I found that if they want to expand, like from a small provider to a small family childcare home to a large childcare home, it helps to be able to look at what a loan for your home would cost to improve it. Again, I'll build a separate spreadsheet for that, but I want you to look at, we're going to go down to year 1 and look at your loan interest. So this is a deduction that populates down here underneath the loan categories under deductions. But here's your net income, which is $15,000. So that is composed of your total revenue minus your cost of goods sold equals your gross profit minus your total expenses equals your net income. So that's this figure here, net income. And without getting, accounting 101, you're going to have taxable income. That might be different than your cash flow after you finance, because you can't write off your entire loan payment. You can only write off your interest, which we've calculated here for you. Now we're going to see how much take-home money are you going to have, basically. And you have your net income here. You have your loan payment. And now here's your take-home, $91.76. Not bad. So what I'm getting at here is this allows you to determine whether you can afford to go get a loan. And in fact, these are the type of calculations that a bank is going to use to determine whether you're financeable or not. So where this will come in handy with the grant program is maybe you're applying for $600,000, $700,000, $800,000. Let's say you're applying for the full 1.5 million. And on top of that 1.5 million, you need another $500,000 to open up this center. It's going to cost $2 million total. Then you can input a loan in here, and you can see whether or not this is actually going to work. And the good news is when you're submitting this document to the CDSS, they're going to want to see that you've calculated in any other sources of financing in your financial projections. And you can say, yeah, I've calculated the extra $500,000 I need. If you don't have the cash for the matching funds, let's say you apply for 1.5 million and you get all 1.5, and now you have to come up with $150,000. Well, you could just calculate in a $150,000 loan here and determine whether or not you can afford that. And as we know, you definitely can afford it here. Our take-home profit is $206,000. Again, I don't know if these numbers are super realistic because I have a lot of expenses we potentially could enter in, but you all be able to determine that really quickly. So this should give you the tools to be able to figure a lot of this out. All right. So with that in mind, we are going to wrap this up, but I'm going to show you one last thing here, and that is this, the Year 1 Employee Edit tab. So maybe you don't want to use this auto-populating costs of employees found here. Maybe you have a better idea of the exact amount of employees you need, kind of shifting one employee from one classroom to another. Maybe you're saying, I can have 4 classrooms, but I shift kids around a lot. Some go to a playground, some are staying in a classroom. The amount of supervision may be different. This red tab here, Year 1 with employee edits, has all the same automatically generated data, auto-populated data as you find in this Year 1 sheet, but all of the employee costs here are able to be manually entered. So actually, I haven't even made that spreadsheet yet. We're going to do this. Boom. I've cleared all of the data here, and now I'm going to turn this gray, and now it's ready for you to manually enter this in. So yay. So you could enter in all of the employee data by hand. You don't have to worry about the percentages we had over here of occupancy of the room versus whether you have a full-time or part-time employee. You can just manually enter it in. All of these, on a side note, sheets here should be formatted to print on 11 by 17 paper. You can print it on 8.5 by 11, but note that this file, you're not allowed to upload an Excel document. So we come here to our application. This is where you would add this here under the operating budget. Projected operating budget for the new site. You cannot upload you can upload an Excel document. Okay, never mind. I take that back. You can make this edit. You can send this spreadsheet to them, and I stand corrected. Correct myself. That's great that they'll take a spreadsheet. So you should be able to live edit this and just show what your first year is, and it should show. It should be suitable to make the CDSS happy, and should get you excited about running some scenarios for your business, some financial scenarios. So, okay, in closing, I'm going to clean up the spreadsheet just a little bit and send it out to all of you along with a link to this video on YouTube. I hope this has been helpful. If it has been, feel free to like the video. If I'm not, this means I'm a real YouTuber here, right? You got to like the video, subscribe, and ring the bell for notifications, I think. Leave a comment below. But if you do have questions, please leave a comment in the YouTube video section. I'll try and get back to you on comments. If you want more tutorials on this, or want to reach out to me directly, again, do that through the Small Business Development Center. And I just want to thank you for tuning in. I apologize for taking so long to get this out to you. And I hope that you find this spreadsheet helpful. Thanks a lot, y'all.